Ladies and gentlemen, esteemed colleagues, and financial aficionados, good afternoon. I stand before you not just as Tom Powell, your super chairman, but as a fellow traveler in this roller coaster of economic adventures. As we gather for this final FOMC meeting of the year, I cannot help but reflect on the journey we've had together. Now I know we're all anxious to see how today unfolds, especially given the buzz surrounding the markets. Rumor has it there's a 99.5% chance that we will be holding rates steady. It seems the markets have already set their sights on a future that involves some serious interest rate gymnastics. I mean, I've heard talks of 100 basis point cuts into the next year, and that's quite a somersault. But my dear colleagues, as we navigate these financial acrobatics, let's not forget that markets have their own language, and sometimes they speak in hyperbole. We're here to bring some sanity to the chaos, to add a touch of pragmatism to the narrative. Now, you might have heard about a new dot plot released by the Fed making its rounds. It's like a roadmap for future endeavors. And yes, it does show some rate cuts into 2026. It's like planning a journey with pit stops along the way, except instead of gas stations, we have interest rates. It's a bold strategy. But as we all know, the best laid plans can sometimes take unexpected detours. As we eagerly await Chairman Powell's insights, let's keep our feet on the ground. There's anticipation in the air, but caution should be our watchword. We've got a job to do, and that's to ensure the economic ship stays on course. So, my friends, buckle up, keep your expectations in check, and let's approach the discussions ahead with wisdom that comes from weathering storms together. Thank you, and let's make this final meeting of the year one to remember. Let's give it up. Whoa, that's weird. Let's give it up for Tom Powell, a rare sighting of Tom Powell. Hasn't been here for a while. That was really great. I appreciate it. We can barely afford to have him on, but that was worth every penny, guys. We spent all of the pennies for that. As you guys know, this is the final FOMC of the year, making it the biggest, most important FOMC event that we still have this year. We have a 90, I guess it came down a little bit, 96.9. That's actually really interesting. Earlier today, this was 99.5. Now 96.9. Kind of a irrelevant difference here of no interest rate hike with a 3% chance of a 25 BPS. If you ask me, the rate hikes are over. Despite the Fed having talked about it over the last few meetings, I don't believe we're going to see more. However, I do want to temper expectations, as Tom Powell said so eloquently. I love the metaphors. We need to keep our expectations in check. I don't think we're going to see a really extreme reversal or interest rate cut. And if we look at that dot plot that he alluded to, this was released by the Fed. And basically, my understanding is each one of these dots is a member of the FOMC, or member of the Fed of the FOMC. And these are their predictions. So in 23, for their Fed target rate, in 23, almost all of them agreeing on 5.5 or 5.25 to 5.5. Into next year, we do see one dissenting vote that's actually looking for that interest rate increase. And that would actually be a 50 BPS interest rate hike. But you can see that the rest of the council not really in alignment there. Some of them seeing almost no change. And actually, more and more of them starting to look for a cut in next year. I think they were talking about maybe the second quarter. As we get into 25, we can see that things get a little bit more mysterious, a little more vague, as almost no one can agree about 2025. We're either going to have 2.5% or 6%. Okay. And then into 26, we see finally every member of the board agreeing that we will have a lower interest rate than we have right now. And we can see that with all these dots down here, the majority looking for 2.5 to 3%. And in the longer run, same thing, 2.5 to 4. So this was, to my knowledge, this is a new tool, the dot plot that they've released. It does have value, but I think more than just the value we see on this current chart, I believe that this chart, as it is updated with the data, as they get the data, and jobs are robust and banks are resilient. As I get the data, I think that we'll see this dot plot change, and I think that will be the real value, actually. Seeing how the voting members change their mind, or maybe with different economic developments, they have higher or lower interest rates, and that will be the value, in my opinion. I wanted to really quick pull up the history of interest rate, or the Fed fund rate. Here we are, dating back all the way to 1955. Back here, the gray areas, I believe, are recessions, and kind of an interesting chart. We love charts on this channel. If you're just tuning in for the FOMC, that's great. If you're here every day, charting, trading, even better. We love charts, and this kind of reminds me of some crypto, actually, at this point, doesn't it? Kind of reminds you of some crypto. You can see from 2009 all the way into 15, we basically had zero effective fund rates. Those rallied up a little bit in 19, back to zero with March of 2020, the flu-demic. Then we began increasing them again to where we are today at 52555. This is kind of cool from a nerdy chart perspective for a few reasons. One, if you look at this history, you can see very clearly defined from 55 all the way to 81, an uptrend. We see higher highs in the interest rate and higher lows when they did cut those rates back down. The only exception maybe right here in 72 in January, but we see a pretty clear uptrend here. Higher highs, higher lows. The chart is moving up. After 81, the exact opposite or reversal happened, where we saw the highest interest rate or effective fund rates, keep calling it interest rate, same difference, almost up at 20%. And since then it has fallen with a clear downtrend of lower lows and lower highs, the exact opposite we saw for the first 30 years. And then it gets spicy into 22 because we have a very clear uptrend, a very clear downtrend, and then we start to see a higher high again. If we were to look at this chart and only use this and not factor in any other economic data or whatever, unemployment, inflation, if we were just looking at this as a chart, we would start to think that this was in an uptrend again. This is the first time that it has substantially put in a higher high, really ever, outside of the first 30 years. Now, I believe everything can be charted, but it doesn't mean that we know the future. That uptrend may not actually exist, but it does stand out from the data, and I find that really, really, really interesting as a nerd. So, what we might see if we followed those dot plot projections actually would be then a higher high into a higher low, not returning to that 0%. But I think that that's way too far into the future to predict. So here we go. Here we are. We've got our chart pulled up in front of us. We have the dollar down below, Bitcoin up on top. We have three marks, three horizontal lines on the chart, and those are telling you the times for today. So those of you that are confused or maybe turning in for the first time, in about 15 minutes, we will get the interest rate decision live. We're all going to look for it together as we do every FOMC. At 2 o'clock. Yeah, that's at 2 o'clock. At 2:30, CherPow himself will speak. We just had Tom Powell speak. What a wonderful guy. Love him. Really handsome and smart. So we have those up here so we can watch price interact as we are live. We're going to turn these down to the 1 minute like we always do. I am going to really quickly go over kind of our base strategy or our base ideas for this. Number one, guys, if you are not a seasoned trader, and even if you are, I do want to encourage you, today is a very rough day to look to trade. In the past, we have seen extremely volatile moves that essentially just look to stop out longs and shorts, I call it a whipsaw, and roughly return to where it started, kind of leaving everybody in a bad mood. At the moment, I will say this. We see a very typical price action into these events usually. And that is, we tend to see the market trend in one direction into the interest rate decision at 2 o'clock today. So right now, I would just say that was up, but we'll see when we get closer. So either up or down, right? We see it trend in a direction until the interest rate decision is in, and then almost always we see that reverse after the interest rate is published into when CherPow speaks to when we see it again reverse. So we have, let's say we're trending up at the interest rate decision, usually see it reverse, head to the downside. As soon as CherPow speaks, usually returns to roughly about where it was. So this is why trading today can be so difficult and so dangerous. When we get closer, we'll have a better idea of what direction. I would say right now it's trending up. Of course, the same can happen in the reverse, right? We can see it move down, then back up, etc. So be very, very careful today. It is a really easy day to get liquidated. That's it. I had to say it. I care about you guys. I don't want to see you guys get hurt. Speaking of that, if you are going to trade, if you don't care about my warnings, I can't stop you, and I assume that's a bunch of you anyway, then sign up with FEMX, our sponsor. Our crypto exchange sponsor. They are my favorite #1 crypto exchange in the game. No KYC. They've been around for years. We've had an amazing partnership with them. And Lux Algo, which you will see us use today, but we're going to be doing a little less charting than we typically do. Lux Algo, the #1 indicator company on TradingView. They're huge. They have hundreds of indicators, etc. Go check them out. Links in the video descriptions below. All right. Let's pull this up. Get it on the 1 minute. I also, as a bonus, figured we would have gold and the S&P 500 up. I'm going to leave them off for now because I don't want the white screen. But as things shape up and as we start to see volatile moves, we'll definitely be pulling them back on. I do want to thank everybody for this year. This has been a wild year. These FOMC meetings, we are the home of them. We were doing them first. Then everyone all the way up into mainstream media caught on, and that's cool. We're trendsetters. But you're here, and you have a choice of where to watch these, so I want to thank you all personally. Don't forget to smash the likes and subscribes. Help hype the stream up. The more engagement a live stream gets, YouTube says, we'll get more reach, more viewership. So that means voting in the polls, smashing the like, sharing the stream, subscribing while we're live, all those stuff. Really, really big. Hoping we get some big numbers here today. With your help and your engagement, we can get there. Absolutely. So really quick, we don't have that much time. That's why I love these. Basically, the key points today is almost 100% chance of holding rates where they are, and we don't really see the market pricing in those being cut back until about halfway through next year, and that means that rates are likely to stay higher for longer. CherPow could come in, give us a curveball, which he rarely does, usually nothing burgers, but could give us a curveball outside of kind of the Fed's normal rhetoric, and maybe we will see some interest rate changes, but I would bet that we do not. I think he's likely to walk back expectations for the market. We are seeing the S&P, I guess I spoke too soon, I'll pull it right back up. We have seen the S&P make some very, very strong moves over the last, since October, makes sense. Since October, breaking past the high of July, and even right now, I know this is a little hard to see, even right now, currently, we are trading above the lower high that we saw, I think, Q1 of 22 after the all-time high got sold off. We are back there, leaving virtually the only resistance left, or the only real target for the S&P, right at the all-time high, 48.22. This is, in my opinion, the market getting heated up, looking for those cuts. And I think that Jerome Powell today is, or CherPow, could I get a CherPow in chat? We need a CherPow. I think he will likely walk that expectation back. He does not seem to like to get people excited, kind of like Gus, doesn't like to get people excited until it's time. So I think that is probably going to be the main rhetoric today. I think it's going to be rather hawkish. I think he's going to try to get investors off the ledge. I think he's going to try to calm them down. That's my bet. There it is. A CherPow, a CherPow, a CherPow, a kapow, a CherPow, kapow. Oh, cool little random note here. YouTube, I got an email this morning. YouTube now will give us for free, I guess, a certain amount of gifted memberships a month. Let me see if I can get this to work. I think I only saw that we have 10. So here's what we're going to do. We're going to give away 5 of them now. We'll give away 5 of them probably right before CherPow speaks. So make sure you have liked and subscribed during the live, because YouTube says they will give these to people who engage the most. What a great thing to do. I can give 5 right now, free of charge. Here we go. 1 for you. That's right. 1 for you, my friend. Here we go. Just ripping them off. There it is. You do have to opt into these. If you haven't, we'll be giving away more, so make sure you opt in. There are a ton of people here today. Holy I don't even know if I should shout everybody out. I feel like by the time I do, the whole thing might be over. Hopefully we hear from GINA today. I hope no one else speaks. I hope it's just GINA. Even CherPow doesn't have to come on. We'll just have GINA come up. GINA's boyfriend, I hate you, and I'm going to fight you. There are a ton of names here. Holy, everything in me wants to shout out everyone here, but look at what I'm messing with here. 420 Bud Monster, Fifth Dimension Secret, Aaron Cruz, Abram, Agus, Akil, Chandon, Alchemist, Alan Daniel, Alpha Wolf, Adon, Niku, Andy S, Arden R, Atomic, also Mystic, Baby G, Beef Loaf, Benjamin Smith, Bitcoin BMW, Brian Aranda, Brian Barnett, Butsonator, Cambo Zone, Cap or Die. Ooh, rough. Catracho, Caveman, Chocolate Bee. We're just on the C's, guys. We're just on the C's. If you're here today, please put something in chat so you pop up here as these participants. I can't get everybody. I can't get them all. What's up, Crypto Z? Francisco, more cowbell. We're going to need more cowbell. That is for sure. That is for sure. I am Mayor Quimby. I should just yell like I'm Mayor Quimby. I hear sounds. Do you guys hear those sounds? Is that like a radio station my headphones are picking up? I don't know. That was weird. It's like whispers. Maybe I'm going crazy. Whoa, there we go. Memberships are gifted out. Congrats, Vince Alver, Dr. Crypto, Squashbuckle, Scallywag, my guy. JD Club. What's up, man? That's the whispering. I hear it now. John Foster, Crypto. We're going to be giving it away more. Make sure you've opted into them. Make sure you've engaged with the stream. You're more likely to get them. We have just 12 minutes before the interest rate is live. For whatever reason, if those of you aren't familiar, they publish them to like news sources at 2 instead of just publishing them publicly. I don't understand. I don't really get that. That is loud in my ears. I don't really get that, but they publish them to, let's say, Bloomberg, CNBC, whatever. And at 2 o'clock and into 2 o'clock, we all open up a Google tab. We type in something, and we look for that interest rate decision to be in first. And as always, guys, put it in the chat when you get it. Name your source. Please don't just put a number, even though you guys are just going to put a number anyway. Try to name your source so we know it's not just made up. By all means, it's probably going to be 5.5, but you never know. You never effing know. Get it. What's up, man? What's up, AH? Jack and a Crack, how you doing? Pickle, Monkey, Redman, how you doing? How you doing? Let's go to the moon. What's up, Harshad? I mean, what if the moon was the friends we made along the way? It's called controlling the narrative. Of course it is. How you doing, Shrink Tech? Vince Alver. I love the emojis. Put some emojis in chat if you got them. Mel Hampton, Grapes, RW, Dow. What's up? What a dooski. Chillin', my friend. Straight up chillin'. Nothing burger coming. Wesley Salvson is hungry for nothing burgers. Looking at our poll, actually. If you can see it. CherPow, final FOMC of 2024. LFG. Today's menu. LFG, let's go. Get excited. 50% looking for some spicy bull wings. 35% bland nothing burgers. That's probably the bet. And 16% into the sour bear bread bowls. All delicious choices. All delicious choices. There's no wrong answer, fam. There is not a wrong answer in the world. Good times, baby. What's up, VZ? Fat Cat, Crypto Mel. Matthew Barnes, I see you. I see you out there. I might as well shout out, guys. Join the Discord if you're not in it. Join the Discord. 24/7, thousands of traders from all around the world chatting, nerding out. Conversation never stops. It's free. You'll get some Bitcoin just for joining. All of the goodies. Like and subscribe. You know the deal. Can't vote on mobile. Really? I can't on mine. I wonder why. Try updating your app. What's up, JC? Adam, check some charts. Start with AVAX. We have less than 10 minutes. I mean, I will actually pull up AVAX. We're not taking requests right now, Chad. Don't get too excited. We're not taking requests right now, but I will pull up AVAX because it is actually moving. I guess it hasn't gone any higher than that 42.98 from the 12th. That was yesterday. Looking pretty good. There are a bunch of charts that are looking decent. AVAX, absolutely one of them. One's popping up on my radar here. H-bar breaking through resistance. Let's see if it's still there or it's going to make me a liar. It's still there. Looking like it might make me a liar, but still there. H-bar looking great, I think. 10 cents looking pretty good. We have a bunch more. What else is moving? I know Tau is moving. I'm just pulling them up. We're not doing TA right now. We don't have enough time. Tau is moving. I guess it hasn't actually broken out. Just chilling up here in the 300. Still looking for 488. Maybe a test of 285 as support might be a decent place for a long position. So I'll get bonk here quick. What else is there, man? ADA, yes, ADA. We'll look at ADA really fast. Bonk. Moved past our target on the last live stream. We talked about it. Still making its way all the way to 38, in my opinion. I think it's still loading there. Not looking too bad. Cardano, absolutely looking strong. No. Well, I put up another one that's looking strong. Wait, why? What happened to my chart? No. No, 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 no. No, don't do this to me. Don't do this to me. There we go. There we go. ADA looking strong, but that reminded me of another one. ADA pushing past or pushing back to its yearly high at 65 cents. I'm still looking for 72. We've been looking for 72 since 41.6. I think if this thing has the legs, we could see a trade all the way to $1. If Bitcoin gets something favorable, or if it just irrationally reacts to the FOMC meeting and there's nothing favorable. But if we see a continued rally into the end of the year, I think ADA could see $1 before 2024. It's on the table. Absolutely on the table. INJ. That's so weird. I just pulled up ADA and it was an INJ chart. And then I pulled up my INJ chart and it's a Bitcoin chart. What in the F is happening here? What's happening? That's not it either. Just gonna delete my chart. Or are we trading view? See how this is. INJ USDT maybe? No. All right, I'm only gonna try like one more time. What is happening? Why did this happen? I'm very sad. I'm very sad here. My INJ chart seems to be gone. Wait. It really looks like the ADA chart and INJ chart somehow swapped. Let's just see if that's the truth. Now, this is an empty chart too. I don't know what to tell you. Close without saving. I don't know what to tell you, but we don't need the old chart where we're going, baby. INJ broke its all-time high this week, at least on Binance, 27.27. Let's see where we're at now. Not a strong rejection from that all-time high break. Back-tested the daily fair value gap from yesterday, and it looks like it's putting on more gains. INJ. All right. I don't even know if I own INJ. Kind of wish I did. We've got 5 minutes until the interest rate decision is in. Is there anything else I could possibly pull up in that small amount of time? I do not know. Do not know. We're going to find out here. Let's look at CoinGecko really fast. I love you guys. I love you guys out there. I see each and every one of you. Bonk. ICP, I guess, is finally moving. Interesting. Coin or Ape finally moving as well again. HNT, Celestia, FET. I think I looked at that earlier, but it wasn't that actually spicy. But we'll see. We'll see real quick. 3, 4, 5 minutes. 5 minutes. HNT, FET. Near Rune. Not seeing anything too interesting yet. It seems like the AI narrative doing pretty well. FET definitely breaking out of its range here, breaking market structure to the upside. I think we're heading for 73 cents, currently at 64, maybe as high as $1. Now, this isn't breaking its all-time high, but it is breaking a very strong high from February of 23, and pretty much all that remains is that all-time high at $1.18. If you invert this chart, this is one of the most bearish charts I've ever seen. This is so bearish if you invert it. Good news, life isn't inverted, so that means it looks pretty bullish. I think this is moving. All right. We are quickly coming up on the interest rate decision. Let's take a look at the dollar and Bitcoin. Bitcoin, I'm going to make the executive call here and say, I'm going to say this is trending up into the meeting, at least at the moment. So if we were to follow what we've seen consistently, but certainly not 100% of the time, we might look for this. Of course, the low, I'm just drawing it randomly. Who knows where? Something like this. Maybe our fib tool can help us. Let's do it something like that. Something like that. Looking for 41.9, maybe as low as 41.82. That looks not too bad. Something like that. Then just what? Return right to where we were, roughly. Let me see here quick. Got a few minutes still. Sorry. God, these low time frames have been looking so good today. I'm ready for a pump. All these low time frames I was looking at earlier, they are looking solid again, finally. And before the meeting, saw this little rally, I was thinking, man, we might just pump right through this meeting. But of course, as soon as I thought that, I realized, oh, the 4-hour candle just closed. And it did not move for like an hour. We are putting on some higher highs here. This is actually looking very good here. This 4-hour closed directly at yesterday's or the day before swing high. It's just about 42K. We do have an order block of resistance above us on the 4-hour. You can see this right here. Right there. 42.1, 42.3. Likely to act as some resistance. Looking at the bigger picture, Bitcoin fell down to 40K, looking for a return to about 43, possibly 44 from where the fall began, and that would put us right in kind of that retracement territory. Our 1618 right here at 43. It's going to be spicy. I don't know if it'll be spicy today, but it's getting hella spicy, guys. We are almost 2 minutes away. 2 minutes away. Let's look at the dollar really quick. Dollar also kind of trending up into this meeting, looking actually pretty similar to Bitcoin in some aspects here on low time frames. If we do this, kind of similar looking. You've got like the highs breaking the highs, higher lows. I don't know. Maybe that's a stretch. That could be a stretch. Is what it is. Less than 2 minutes. Oh, can you feel it, boys? Can you feel it? Do you think they'll have the data today? Like, do you guys think that they'll have found it today? Like, CherPow will show up with like a really big, like, trapper keeper binder full of papers, different colored papers, different size papers, different textured papers, and just be like, we got the data, guys. We figured it out. Here's what we have to do. You think that's going to happen? I don't think so. That'd be cool, though. Hopefully we see GINA. All right, we have 60 seconds. 60 seconds, fam. 60 seconds till this interest rate decision is in. In those 60 seconds, what I want you to do is open up a tab on Google. Type in some combination of Fed interest rate decision December 23. Sort it by when it was published. Has to be published. It can't be published yet. Anything you find can't be it. In 40 seconds. So after 40 seconds has passed, you must find something that was published after. And whoever gets it right wins a prize of my gratitude. We've got 2,600 viewers. Oh my goodness. It's a CherPow kind of day. It's a CherPow kind of day. All right, let's go. We're closing in. I'm going to use cryptocraft.com because apparently they update this really quickly. I'll just put their link in the chat. I don't even know if they have anything for sale or not. One thing we do know is that we need to end fossil finance. End fossil finance, Jay. And to shut the effing door, we've got 1 second pending. Ooh, I like that. That is satisfying. The UI on this site is not great, but that is a satisfying pending. And there's the decision according to cryptocraft.com. Let's see what you guys say. Who's got it? Put it in. Put it in a source. Don't just say 5.5. Got to put it in. Got to put it in. Smash them likes for Tom Powell. Tom Powell. I'm Tom Powell. What's up, Donald? I don't see any source. Here we go. Bitcoin making a move to the upside. The dollar taking a giant shit live on camera. Let's go, fam. Spice is coming. This is quite a drop on the dollar. Wow. We are on the 1 minute, so everything here looks much bigger than it is. However, 0.38% on the dollar in this minute is a pretty volatile move, and it doesn't seem to be stopping. The dollar is heading for the garbage. Bitcoin pushing up, breaking today's high 42.3. Let's go. It's going to be a spicy meeting, I have a feeling. All right, let's see where we're at. Oh, the dollar's still tanking. Ho! I told you it'd be the biggest FOMC meeting ever. Told you. All right, so we started up here. We were right. It was trending up. I wonder if we'll still get this price action. I wonder if we will. I wonder if we'll see it reverse and then right as he speaks, kind of return back to that medium. I wonder. That medium being 42.2. I got to turn my little space heater off. I'm starting to sweat. Or maybe it's the excitement. I think it's the excitement. Holy shit, the dollar. Holy. Wow. That is just wrecked. I love it. Bring me the chaos. Bring me the spice. Dollar still dumping. Seemingly just no bottom here today. I'm turning the space heater off. Hold up. Got it. Wait. I'm feeling the spice. Are you guys feeling the spice? I'm feeling it. I'm starting to sweat. Bitcoin's still pushing up. The dollar's still absolutely nuking. Let's go. We got to tweet this. We got to tweet it. I'm sorry. I know I don't want to be tweeting while we're live, but we have to tweet this. This is such a good tweet. Let's pull this up quick. You can follow me on Twitter at TomCrownCrypto. That's right. Here we go. There we go. Interest rate unchanged. Rip dollar. Rip dollar. Wow. That is quite a dump. And I do love that Bitcoin seeing a little green on this. Makes me extra excited. Oh boy. Oh boy. Who's ready? You're ready. You're ready. There's the tweet. We have 3,000 live viewers, people tuning in right now to the giant, at least in this time frame, giant dollar drop. Bitcoin is pushing up. Looking at strength here. Let's turn to our 4-module high-tech chart room. Here we go. The S&P 500 following Bitcoin, maybe, or just doing the same move. Gold seemingly as well here. That's quite a big move for gold. Volume is up. Stocks hitting 4,000, or S&P 500 hitting 4,600. Remember, guys, we talked about at the beginning of the episode, the all-time high only 200 points away, or a 3% move for the S&P 500. Very achievable by the end of this year. I love that the dollar is moving. This is one of the first times in as many FOMCs as I can remember that we actually have price action that makes some sense. Actually makes some sense. Dollar move down, Bitcoin up, gold up, stocks up. We have not seen this combination in many in FOMC. Weirdly, over the last few, what we've seen is maybe the dollar have strength, gold be weak, Bitcoin be strong, and stocks move sideways. Nothing made sense in that scenario. This one actually makes sense. This one's actually getting me excited. I do want to welcome all the new viewers here. One Pan Wonder subscribing right now in the moment. Welcome, One Pan. Welcome to everyone else finding us for the first time. You found your home. If you're a crypto or chart or trader fanatic, nerd, you found your home. This is for you. This is for you. Wow, that is quite a dump, dude. That it's not necessarily the size of the dump for the dollar here. It's how fast, right? It broke yesterday's low. Did it break actually the low back here? Not yet. Let's mark that on our chart. 103.2. Sitting right there. Let's get rid of this one. Actually, no, we need that for memory. To remember. There we go. Getting very, very close to, I think, last week's low or Friday's low. Wait, today's Wednesday, 3 days ago. Either way, to the local low, 103.272. It does seem like the dollar is chilled for a second, but Bitcoin showing no chill, not following our typical FOMC price action, which is to reverse after the interest rate decision and reverse again once CherPow starts speaking. It must be Tom Powell. His influence. He must have gone long. Tom Powell must have gone long. That's the only explanation anyone can come up with. Let's take a peek here. Coming on down. Coming on down. Just as we said right before the interest rate decision, we had a fall from 45 to 40.1. Where are we looking? We're looking back at 43K. I said this probably just minutes before this happened. Looking for 43K for that 0.5 to 618 retracement that we're always looking for. And Bitcoin does seem to be in agreement here, moving up. I like it. We have not quite broken December 10th, or the high immediately after the sell-off. That is basically what I'm sitting here watching for. 42.6 is going to be the number to take. Retaking 42.6, I think we're looking at 44K very quickly. Very, very quickly. What's up, Luck? Subscribing right now. Rodrigo Mendez, Harley Anderson 10. What's up? Spaz 83. Peter Neuwenhus subscribing. I think we've already had let's see. A lot of subscribers already. Holy shit, we already had 60. We've barely been live for half an hour. 60 subscribers. Keep it up, fam. Now's the time to join. We are racing Bitcoin to 100K, and we are winning. Maybe, with your help. Aram Razgar, Id Riziki, Aaron G80, Tagio Garcia, Ione Stosia Nagy, Erickson Hernandez, Varut Pimpa, Who else? Who else is brave enough to subscribe right now so I can shout them out? Who else? Loading name, no hike, source, trading view. All right, you got it, brother. 3 months in the membership. Good for you. You're my bro. Pickle gifted 5 memberships. Hell yeah, Pickle. Hell yeah. Was it? So I assumed that it was because I'm a content creator that gave me the memberships. Did they give everyone gifted memberships? That'd be wild. I doubt it. We're going to give away 5 more memberships here in just a few. We're going to do it before CherPow, before he's live, just to get the extra hyping. Dollar chilling, Bitcoin chilling. All right. A little breather, a little breathing room here as the interest rate decision came in as expected. What's up, Butsinator? That's the best name. What's up, Mark Smith and Tom? The gas fees in shorts are on bear. Gas fees in shorts? What do you mean? I don't really know what you mean. Gas fee would be Ethereum network, and then short, typically funding rate, right? What do you mean? Like DeFi, you're talking about your funding rate? Speaking of that, might not be a bad thing to look at. What's up, David Valquez, Doc Brown, Shadow Burn, Robbie Sorber, Troy A, Dream Lifestyle, Red Silver, Johanan, DZ, Rud Ranil Haldar. We got so many subscribers all at the same time. That's wild. Keep them coming. Keep them up. Keep the energy up. We only have 20 minutes. We only have a few minutes until CherPow is going to join us live here. Let's look at some metrics really quickly while people keep subscribing. What up, Luke? Welcome to the fam, my friend. Let's go to CoinGlass. Go to CoinGlass. Let's take a look at some of our favorite metrics. Yes. We'll open up the super charts. We'll look at our liquidations. We'll look at the funding rate so we can answer that question. Answer the question. Let's see. Fear and greed. A metric that I think is pretty worthless now, but it is interesting and easy to understand. Remained at around 75 since October. It has begun to dip down after our, 10% sell-off from 45K. Has dipped down into 65, which is still greed, but more neutral. Not really. I really don't think this is a good metric to trade by. At one point, all the way back here, it was. And then at some point along the way, it got lost in translation. It doesn't really seem to be a great predictor. It doesn't tell you anything you can't just immediately tell by opening YouTube, right? Bitcoin balance on exchanges. Let's see. Any developments here over the last 30 days? 3.5K added to exchanges. 40K Bitcoin added to exchanges over the last 7 days. That's actually pretty big, likely with that sell-off. But these are still pretty small changes. Pretty small changes if we look at the bigger picture. Looks like on the rise to 44 or 45K. We actually did see Bitcoin start returning to exchanges. However, it did not yet break November's high. And so we talked about this a while ago. What we're seeing over the long term is a fleeing or a exodus of Bitcoin on exchanges, leaving exchanges into wallets or whatever they're going to. And basically that is lifting selling pressure off the market. With each Bitcoin removed from exchange, that is one whole Bitcoin that cannot be sold at the market value, and typically is a bullish sign. So I definitely like to see this continue. I don't love this newer trend on the move up to 45. I don't like this Bitcoin kind of climbing up here. It's not huge, but it's enough to watch for. I think I'm going to keep my eyes open and hopefully I can find a chart to set an alert here on, here we go, on this. I don't want to see this continue. My like hunch would be that price moves up again, and when it moves up again, we start to see that trend back down. Time will tell. Funding rates, kind of positive. Not what I was hoping to see. Positive across the board, but not too heavily. 1.015 is just above the neutral setting. So it is a little bearish. Got a little bearish there, but not too strong. Liquidation map. Let's look over the last month. Shorts have been growing. We have bigger liquidations, about 1.5 billion back to the high. Of course, longs looking at 3 or more billion all the way down to 36K. Over the last day, certainly more long liquidations have been opened than shorts. Shorts remaining relatively flat. I will say I used to think that that would mean price would go down to chase this liquidity, to liquidate these longs. Over the last 6 months, we've noticed the exact opposite. So I'm going to stick with it until proven otherwise. While short liquidations are low and longs are high, we've been seeing price move up. I'm going to stick with that. I don't think there's a reason to change that. Looking at super charts, here's what I'm really hoping to see something spicy with. CVD down, CVD not really moving, cumulative volume delta not really moving with price here. Open interest took a dump on that sell-off, and that's what you want to see if you're a bull. That's what you want to see. I think it might have hit kind of the lowest levels since May of 22. Wow. Open interest moving down with that sell-off is definitely what we want to see. We don't want to see it increasing. When we see it moving down and price moving down, basically it's perpetual traders aren't really agreeing with the price. They're not agreeing with the price action. They basically think it should go up, right? That's what's inferred here. I don't know how you'd be paying fees on your short because funding has been virtually completely positive since October 19th. So maybe you weren't talking about funding. Not really sure. Bitcoin holding on to these gains right now with some smaller short liquidations. This is not a short squeeze at the moment. That was definitely a long squeeze. Definitely a long squeeze. Look at that open interest just plummet with price here. Price fell. CVD fell, which basically spot selling. Agrees with what we see here. Open interest taking a dump with a huge, it's not that big, but still pretty big. This was only in 1 hour. Actually, that's massive for 1 hour. $73 million in longs liquidated. That's looking like a short squeeze. As price is kind of chilling here, open interest is coming back up. Still kind of toss-up. Still kind of a toss-up there. But getting close. Getting hecka close. The dollar sinking down again to 103. 103.27. Looking at our wick low from December 7th. So that was a week ago. Last week's low. I think I was right. Wow. That is not a good look for the dollar. Let's zoom in here. That is not a good look for the dollar. The only good look here would be if the dollar ends up closing this day green and moving up, I'd say like 106 pretty quickly. I think you could start to see a little inverse head and shoulders. But if that doesn't happen, and if 102.5 breaks, this is just looks like death. Send it to 100. Send it to 99. Wild. I didn't expect that. Did you guys expect that? Look at this thing dump. This is a big old turd. Right on down to that low. Likely to find some support there. Maybe a short-term bounce. There we are. Bitcoin chilling off, cooling down at 42.5. Taking a breather. I wonder if it said, oh, wait a minute, I forgot. This is what I usually do. I usually go back down before CherPow speaks. I don't know. I don't really know, man. Set an alert. Set an alert. We got a ton more subscribers. Keep them coming, guys. Keep them coming. Make sure you join the Discord if you're new. Gata Wag subscribed. Xavier Charles J6. Daniel Akaranza. Rocky super chatted $5. Thank you, my friend. What's up, Tom? Thanks for all the good stuff from Myrtle Beach. Love Myrtle Beach. Been there myself. Wish I was at the beach in this very moment. In this very moment. Well, no, not this moment, but soon. Dollar already breaking low. Not even a short-term bounce at that at last week's low. Just clearing for lower. Let's see if stocks are still moving. Stocks are still moving, but definitely showing kind of that same energy as Bitcoin, chilling out a little bit. Bitcoin. It was called gold Bitcoin. Gold has not gotten the memo. Gold says, I don't care. I don't care. I'm going back up. Back to 2003, which is what, like October's high at the moment. I mean, if gold does make a run back to the higher 2000s, this could start to look good. I've been pretty bearish on gold since this classic textbook blow off top we had on the 4th, where gold hit an all-time high and got meteor smashed back down, closing the day bearish engulfed, closing the week bearish engulfed, and we were even looking at the month to potentially be bearish engulfed here. It looks like it was. Gold was looking pretty bad. Now today's bounce might be short-lived. It might not be as exciting as we want it to be, but that's a pretty solid candle. If it can hold these gains into the next 2 hours, 43 minutes, gold may make another run at that all-time high. You can see a higher low here on the day after breaking the all-time high. That's really all you need. You broke the all-time high. I'm painting with white on a white chart. Not effective. Bearish engulfed, fell down. If this low is held, you just have a higher low and you're looking right back up there. I'd say 2072. A little early to get excited about gold like that, but it is absolutely on the table. Keep your eyes peeled, as it doesn't seem to get the memo that everything else is chilling. Gold's still rallying. Obviously, it has rallied the least percent-wise, but it's still rallying. That's what's interesting. It has not really chilled out like we see maybe on stocks here, a little bit calmer rally. Bitcoin, really the same thing, even retraced a little bit. Interesting. This is absolutely evidenced by the dollar's incredible weakness here. Why would the dollar have such weakness on no interest rate change? It's weird. I guess the market continuing to price rate cuts in the shorter term. They might be disappointed. Man, more new subscribers. I love it. Coins Chick renewing the membership. A CherPow. A CherPow. It's a CherPow kind of day, fam. A Chairman Powell. A Chairman Powell. Chairman Powell will be joining us in just a few minutes. Just a few. Buckle up. Roll them if you got them. Crack a brew. Because the spice is just starting. Azizi, Bujang, and Fakel, and Stop Loss Bounce, and Jonas. All subscribed in that little amount of time. I love it. I love it. Maybe, I don't even know how many subscribers we'll get today. Let's go for like 400. We can do it. We've got the numbers. We've got 3,100 viewing. We've got 700 likes. Can we get that to 1,000? I believe in you. Let's get it to 1,000, fam. Dig deep. Dig deep. Pull those likes out from the deepest part of you. Put them right on this stream. Whew. Stocks. What is happening? Stocks are making a run for the all-time high, it seems. I don't want to say anything kind of like hyperbolic like that until we hear CherPow, because like I said earlier, we do see reversals very commonly right into when he speaks. But goddamn, on the week, look at it soar. Look at this soar. Closed the week right below the high in July, and now just ripping in 3 days of this week, already putting on almost 2% gains. But more importantly is the gains where you're having them. Breaking past your lower high in your structure for the S&P here, setting a lower high into a higher low, breaking that lower high. You're looking at that all-time high, very possible into the end of the year, provided we don't have some kind of crazy curveball. Very possible. What if I just make this chart black? It's kind of annoying me. I'm gonna make it black. Boom. Ta-da. We'll make this one black too. Friends don't let friends chart on white charts. I'm sorry. It's bad for your eyes. We care about your health here. We care about your health. Canvas really quick. White. There we are. S&P continuing to push higher by itself now. Interesting. Gold taking that breather while the S&P pushes. There we are. All right. And the dollar catching no bids. Look at this. Look at this move, man. Almost half a percent in 1 minute, in 60 seconds. That's incredible for the dollar. The dollar VIX has got to be up. Really, really weak bounce for maybe 10 minutes. Immediately sold back off. I mean, we got to zoom out on this. We got to zoom out on this. Oh, I have MACD on here twice for some reason. This is our first standing FOMC, by the way. Wow. Lux Algo weighing in very bearish on the dollar here. Very bearish indeed. After kind of escaping this downtrend, finding resistance at our resistance band, breaking a lower low, that is not a good look for the dollar. Geronimo. Timber. A timber. Wow. Wow. That is nice too. Look, it caught the dollar top right there, 107. That might have been the lower high. We were looking for 109, but 107 might fit the bill. Kind of rounded bottom on the month. I don't really know what to make of that. That's okay. We don't always have to make something of everything. It's all right. It is all right. Little green candle, maybe back to 103.27. Previous support, did not hold as support, maybe tested as resistance now during the live. S&P, dude, I keep saying by the end of the year, but at this pace, I still don't want to say it before CherPow comes on, but at this pace, looks like it wants a new all-time high this year. How wild would that be? Look at this hourly candle. Boom, on this, just the second the interest rate came in. That is something. That is something, man. Holy shit. Look at this. Who would have thought at the start of this year, people were so giga bearish on everything right here. They would have lost virtually every short they made. The only time you could have really shorted was in July. That was it. And we did have a short. We had a short right here on this live channel at 4,300. We ended up getting stopped out, I think, along with a lot of the market. Why is there no wicks? Oh, because the colors are backwards. There we are. All right. Still, dude. Holy shit. It might be a stock channel now. Stock and gold channel. No, I'm just kidding. That'll never happen. Don't worry. Don't worry. Still pushing up higher, dude. Stocks, they chill out. Just chill out so that we can get this meeting over with. We have only about 7 minutes at this point until CherPow himself is on. If you missed the beginning of the stream, very likely we'll have timestamps after. But if you missed it, DVR is enabled. You can always go back, watch it. We did have Tom Powell, a special guest, on earlier. He said some very insightful and beautiful things, so I highly recommend it. Let me see if I just turn on 5 minutes of tunes. I need something. What's up, Groove Mover 1? Ho Min Kwan. Sleep by Ernest Hemingway. Becoming a member. Hell yeah. We're about to give away those memberships right before CherPow speaks. Make sure you've opted in to gift memberships. Liked and subscribed, shared, voted, engaged. Alvar Krutman also subscribing. Big Tuna Crypto with the super chat. Let's go. Let's go. Gold still climbing. Wow, I did not see any of this coming. This is spicy. Stocks are just ripping. Gold is ripping. Bitcoin being a little shy here, with the dollar showing extreme weakness on no interest rate change, which was at 99% probability. What else is happening here? Let me read the chat. What else is happening? Why is this happening? Anybody in the chat know? You're all smarter than me anyway. Tell me. It's a little loud. I'm pulling it up. There we are. There we are. A little quiet now. I don't care. It's mostly for me. What's going on, chat? Why is this? What's going on with gold? Exactly, NA. What's happening? Why are stocks ripping? Why is the dollar getting decimated by no interest rate change, which was expected to be virtually 100% probability? Exactly what the market expected. Why are we seeing this move? Why do we see 30 points on S&P 500 in like 2 minutes? Why did gold move from 1981 to 2005? You know what's funny? I bet there's someone in this. Well, there definitely is. I was going to say, there's definitely someone born in 1980 and probably someone born in 2005 watching this right now. Not really related to anything, just curious. Some alts are pumping. Yields are plunging. Ooh, are they plunging? Let's take a look at yields. I actually want to look at, no, this doesn't make sense either, though. That doesn't really make sense either. So 2%, 2% bond yields down pretty much as in line with the dollar here from 468 to 452, but all in that short time period. This doesn't really add up unless I'm not a traditional finance expert or anything. But in general, wouldn't we expect the 2-year yield to rise and break its high if interest rate cuts were coming? Isn't the 2-year going down? Isn't that bearish? Or not bearish, isn't that more suggestive that interest rates are coming? Am I wrong? Let me know. Tell me. I'm genuinely curious. This is what I thought. I thought if we got a break of 525, that'd likely be the signal that we're getting interest rate cuts. I might have that in reverse, though. That might mean that hikes are coming. I mean, you look at it, October was the high of it. I think that was the last hike, right? Are they printing money? Oh, I hope. They're always printing money, baby. That's the problem. That's why we're here in Bitcoin. Really quick reminder. 3 minutes till CherPow speaks. Quick reminder, that's why we're here. The money printer, since its invention, has shown us that humans are not capable of responsibly using it. Literally every example we've ever had in human history, we have printed currency into oblivion, and Bitcoin is on a fixed inflation schedule. It cannot be printed into oblivion. It is finite, and they ain't never going to stop printing. Their response to inflation was to print more money. I'm not going to get into it. Not even going to get into it. But what I am going to do with 3 minutes 3 minutes to go. I'm going to gift out these other memberships. So if you want one, put something in chat. Make sure you're subscribed. Opt into them. You have to opt into them. I have no idea why. But we're going to give them away in 40 seconds. So get your engagements in. Get your engagements in alignment. And then once you do that, well, yeah, subscribing is part of that engagements. Gotta do that. Sharing out the stream, liking. Do we have 1,000 likes yet? These are rookie numbers for 3,000 viewers. Tune in next time for a guy yelling about how many likes his stream has. Not enough. Not enough pictures of Spider-Man. All right. We've got 10 seconds. We're going to be gifting these away. CherPow will be joining us in exactly 125 seconds. Grab your brews, roll them. If you got to leave during the live stream, it happens. Life gets in the way. But you can always leave a tab open. Help the stream out by leaving the tab open. Sticking around even if you're not here. You know what to do. I'm going to gift away these 5 more. We have minutes to go. It's time, baby. What a fucking move. Benjamin Cohen was making fun of how it's not going to be the biggest FOMC ever. And it's looking like it might be the biggest FOMC ever. It's looking like it. I'm going to refresh the stream page. Let's pop this bad boy out. Listen to their terrible waiting music. Nah, we won't listen to their terrible waiting music. There we go. The gifted memberships are away. Randy? Hey, Bigged. My man, Randy. Frito NYC. What's up, Frito? Chef Santana. Barry the Rave. And Freak. All winners of the giveaway. Thank you, YouTube, for giving me free memberships. I don't know why you don't let me just gift as many as I want. They cost you nothing, but oh well. Grapes. You were here at the beginning of the stream. You're just subscribing now. Well, you know, sometimes the right decision does take a little bit of thought and brainstorming and some time. So I respect that. Haywood Jaw. Broing it up, my guy. How you doing? Welcome. D. Verkirky. Also subscribing with Simple Media Production. I don't even know how many we're up to. More than I can count. Sell the dip, says all is in the end. Are you selling the dip? Is that what you're doing? Are you a dip seller? Or are you a dip setter? I don't even know what I'm saying at this point. Less than 60 seconds. We have gained over 150 subscribers in just this stream alone. Join the FOMO, which is apparently happening, as the dollar is eating a giant shit off of no interest rate hike that was completely expected and priced in and probability to happen. Dollar eating shit. Stocks and gold on a ripper. Stocks maybe targeting all-time highs by the end of the year. Bitcoin putting on some gains, but kind of being shy. I am a little reserved. I'm a little reserved for this. I'm wondering what's going to happen here. Yep. But there's no time to wonder, fam. It's beginning. Chairman Powell. Chairman Powell. Chairman Powell, would you subscribe to my YouTube? Mr. Powell, would you please subscribe to my YouTube? It would mean a lot to me. Thanks. All right. What's up, Vishal? How you doing? Here he is. Round of applause. Let me make this bigger for you. Round of applause for the slightly less sexy CherPow. It's hard to go on stage after Tom Powell, I'll admit.
My colleagues and I remain squarely focused on our dual mandate to promote maximum employment and stable prices for the American people. As we approach the end of the year, it's natural to look back on the progress that has been made toward our dual mandate objectives. Inflation has eased from its highs, and this has come without a significant increase in unemployment. That's very good news. But inflation is still too high, ongoing progress in bringing it down is not assured, and the path forward is uncertain. As we look ahead to next year, I want to assure the American people that we're fully committed to returning inflation to our 2% goal. Restoring price stability is essential to achieve a sustained period of strong labor market conditions that benefit all. Since early last year, the FOMC has significantly tightened the stance of monetary policy. We've raised our policy interest rate by 5.25 percentage points and have continued to reduce our securities holdings at a brisk pace. Our actions have moved our policy rate well into restrictive territory. meaning that tight policy is putting downward pressure on economic activity and inflation, and the full effects of our tightening likely have not yet been felt. Today, we decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. Given how far we have come, along with the uncertainties and risks that we face, the committee is proceeding carefully. We will make decisions about the extent of any additional policy firming and how long policy will remain restrictive based on the totality of the incoming data, the evolving outlook, and the balance of risks. I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that growth of economic activity has slowed substantially from the outsized pace seen in the third quarter. Even so, GDP is on track to expand around 2.5% for the year as a whole, bolstered by strong consumer demand as well as improving supply conditions. After picking somewhat over the summer, activity in the housing sector has flattened out and remains well below the levels of a year ago, largely reflecting higher mortgage rates. Higher interest rates also appear to be weighing on business fixed investment. In our summary of economic projections, committee participants revised up their assessments of GDP growth this year, but expect growth to cool, with the median projection falling to 1.4% next year. The labor market remains tight, but supply and demand conditions continue to come into better balance. Over the past 3 months, payroll job gains averaged 204,000 jobs per month, a strong pace that is nevertheless below that seen earlier in the year. The unemployment rate remains low at 3.7%. Strong job creation has been accompanied by an increase in the supply of workers. The labor force participation rate has moved up since last year, particularly for individuals aged 25 to 54 years, and immigration has returned to pre-pandemic levels. Nominal wage growth appears to be easing, and job vacancies have declined. Although the jobs to workers gap has narrowed, labor demand still exceeds the supply of available workers. FOMC participants expect the rebalancing in the labor market to continue, easing upward pressures on inflation. The median unemployment rate projection in the SEP rises somewhat from 3.8% at the end of this year to 4.1% at the end of next year. Inflation has eased over the past year, but remains above our longer-run goal of 2%. Based on the Consumer Price Index and other data, we estimate that total PCE prices rose 2.6% over the 12 months ending in November, and that, excluding the volatile food and energy categories, core PCE prices rose 3.1%. The lower inflation readings over the past several months are welcome, but we will need to see further evidence to build confidence that inflation is moving down sustainably toward our goal. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. As is evident from the SEP, we anticipate that the process of getting inflation all the way to 2% will take some time. The median projection in the SEP is 2.8% this year, falls to 2.4% next year, and reaches 2% in 2026. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We're highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. As I noted earlier, since early last year, we have raised our policy rate by 5.25 percentage points, and we have decreased our securities holdings by more than $1 trillion. Our restrictive stance of monetary policy is putting downward pressure on economic activity and inflation. The committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25 to 5.5%.
Let's go,
and to continue the process of significantly reducing our securities holdings. While we believe that our policy rate is likely at or near its peak for this tightening cycle, The economy has surprised forecasters in many ways since the pandemic, and ongoing progress toward our 2% inflation objective is not assured. We are prepared to tighten policy further if appropriate. We're committed to achieving a stance of monetary policy that is sufficiently restrictive to bring inflation sustainably down to 2% over time, and to keeping policy restrictive until we're confident that inflation is on a path to that objective. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. While participants do not view it as likely to be appropriate to raise interest rates further, neither do they want to take the possibility off the table. If the economy evolves as projected, the median participant projects that the appropriate level of the federal funds rate will be 4.6% at the end of 2024, 3.6% at the end of 2025, and 2.9% at the end of 2026, still above the median longer-term rate. These projections are not a committee decision or plan. If the economy does not evolve as projected, the path of policy will adjust as appropriate to foster our maximum employment and price stability goals. In light of the uncertainties and risks and how far we have come, the committee is proceeding carefully. We will continue to make our decisions meeting by meeting based on the totality of the incoming data and their implications for the outlook for economic activity and inflation, as well as the balance of risks. In determining the extent of any additional policy firming that may be appropriate to return inflation to 2% over time, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
GINA, yes. Could we have GINA, please? No, put your hands down, all of you. GINA.
Thank you. Chris Rugaber at Associated Press. I wanted to ask, how should we interpret the addition of the word any before additional firming in the statement? I mean, does that mean that you're pretty much done with rate hikes and the committee has shifted away from a tightening bias and toward a more neutral stance? Thank you.
So, specifically on any, we do say that in determining the extent of any additional policy firming that may be appropriate, so any additional policy firming, that sentence. So we added the word any as an acknowledgement that we believe that we are likely at or near the peak rate for this cycle.
Dovish!
Participants didn't write down additional hikes that we believe are likely, so that's what we wrote down. But participants also didn't want to take the possibility of further hikes off the table. So that's really what we were thinking.
Mr. Chairman,
GINA, she's right there.
Steve Leisman, CNBC. Happy holidays, Mr. Chairman. Fed Governor Chris Waller said that if inflation continues to fall, then the Fed in the next several months could be cutting interest rates. I wonder if you could comment on whether you agree with Fed Governor Waller on that the Fed would become more restrictive if it didn't cut rates if inflation fell. Thank you, sir.
So, of course, I don't comment on any other officials, even those who work at the Fed. But I'll try to answer your question more broadly. So the way we're looking at it is really this. When we started out, right, we said the first question is how fast to move, and we moved very fast. The second question is really how high to raise the policy rate. And that's really the question that we're still on here. We're very focused on that. As I mentioned, people generally think that we're at or near that and think it's not likely that we will hike, although they don't take that possibility off the table. So that's when you get to that question and that's your answer, there's a naturally it begins to be the next question, which is when it will become appropriate to begin dialing back the amount of policy restraint that's in place. So that's really the next question. And that's what people are thinking about and talking about. And I would just say this. We are seeing, strong growth that appears to be moderating. We're seeing a labor market that is coming back into balance by so many measures, and we're seeing inflation making real progress. These are the things we've been wanting to see. We can't know. We still have a ways to go. No one is declaring victory. That would be premature, and we can't be guaranteed of this progress. So we're moving carefully in making that assessment of whether we need to do more or not. That's really the question that we're on. But of course, the other question, the question of when will it become appropriate to begin dialing back the amount of policy restraint in place, that begins to come into view and is clearly a topic of discussion out in the world, and also a discussion for us at our meeting today.
Can you give some color as to the nature of that discussion today? Thank you.
Sure.
You're not Gina, shut
so
up.
it comes up in this way today. Everybody wrote down an SEP forecast, so many people mentioned what their rate forecast was, and there was no back and forth, no attempt to sort of reach agreement, like this is what I wrote down, this is what I think, that kind of thing, and a preliminary kind of a discussion like that. Not everybody did that, but many people did. And I would say there's a general expectation that this will be a topic for us looking ahead. That's really what happened in today's meeting. I can't do the head count for you in real time, but that's generally what happened today.
Go to Rachel.
I'll take Rachel, though. You're not going to get Gina. I'll take.
Hi, Chair Powell. Rachel Siegel from the Washington Post. Thanks for taking our questions. At this point, can you confidently say that the economy has avoided a recession and isn't heading for one now? And if the answer is no, I'm curious about what you'd still be looking for.
Next question.
I think you can say that there's little basis for thinking that the economy is in a recession now. I would say that. I think there's always a probability that there will be a recession in the next year, and it's a meaningful probability no matter what the economy is doing. So it's always a real possibility. The question is it? So it's a possibility here. I have always felt since the beginning that there was a possibility, because of the unusual situation, that the economy could cool off in a way that enabled inflation to come down without the kind of large job losses that have often been associated with high inflation and tightening cycles. So far, that's what we're seeing. That's what many forecasters on and off the committee are seeing. This result is not guaranteed. It is far too early to declare victory. And there are certainly risks. It's certainly possible that the economy will behave in an unexpected way. It has done that repeatedly in the post-pandemic period. Nonetheless, where we are is we see the things that I mentioned.
I'm curious if you're looking back on the past year, you talked about navigating by the stars under cloudy skies. Can you talk about some of the ways in which the economy surprised you most this year, where you thought it would behave in one way and had to pivot to respond? Thanks.
So I think forecasters generally, if you go back a year, were very broadly forecasting a recession for this year, for 2023. And not only did that not happen, that includes Fed forecasters and really essentially all forecasters. A very high proportion of forecasters were expecting very weak growth or a recession. Not only did that not happen, we actually had a very strong year.
Good.
And that was a combination of strong demand, but also real gains on the supply side. So this was the year when labor force participation picked up, where immigration picked up, where the distortions to supply and demand from the pandemic, the shortages and the bottlenecks, really began to unwind. So we had significant supply side gains with strong demand, and we got what looks like a 2.5% plus, or a little more than that, growth year at a time when potential growth this year might even have been higher than that, just because of the healing on the supply side. So that was a surprise to just about everybody. I think the inflation forecast is roughly what people wrote down a year ago, but in a very different setting. And I would say the labor market, because of the stronger growth, has also been significantly better. If you look back at the SEP from a year ago, there was a significant increase in unemployment. It didn't really happen. We're still at 3.7%. So we've seen strong growth, still a tight labor market, but one that's coming back into balance with support from the supply side, a greater supply of labor. it's a, that's what we see, and that I think that combination was not anticipated broadly.
GINA.
Thanks, Howard Schneider with Reuters, and thanks for taking the questions. I wonder if you could give a little more color or detail on what motivates the lower rates next year, whether it's a coincidence, for example, that the spread between PCE inflation, core inflation, and the federal funds rate stays constant over the year. Are you simply calibrating against the fall in prices, in the price level that you're in the rate of inflation that you're expecting, as opposed to supporting the economy?
Should we go long or short right now? Just curious, real quick.
Nothing quite that mechanical is happening. The SEP really is a bottoms up, built from the bottom up, right? So I think people are looking at what's happening in the economy, and I think if you look at the big difference from September in the SEP, the expectations for inflation this year, both headline and core, have come down, really significantly in 3 months. That's a big piece of this. At the same time, growth is turned out to be very strong in the third quarter, is slowing, we believe, as appropriate. And we've had several labor market reports which suggest, again, significant progress toward greater balance across a broad range of indicators. You're seeing so many of the indicators coming back to normal, not all of them. But so I think that people look at that and they write down basically each individual writes down a forecast and a rate forecast that goes with that forecast. We tabulate them and publish it. And so it isn't, you ask about real rates, I take it, that is something that we're very conscious of and aware of and monitor, and it's certainly a big part of, it's a part of how we think about things, but really it's broader financial conditions that matter, and as you well know, it's so hard to know exactly, what the real rate is or exactly how tight policy is at any given time. So you couldn't follow that like it was a rule and think that you would get the right answer all the time, but it's certainly something that we're focused on. And indeed, if you look at the projections, I think the expectation would be that the real rate is declining as we move forward.
It sounds like the discussion over that, if I could follow up, has already kind of begun. I'm wondering, just related to Steve's question, how the tactics of this play out, given the slowing of inflation and the fact that the deeper you get into 2024, the closer you get to a presidential election. Do you want to front load this, in other words?
Yeah, no, we don't think about political events. We don't think about politics. We think about what's the right thing to do for the economy. The minute we start thinking about those things, we just can't do that. We have to think, what's the right thing? We'll do the things that we think are right for the economy at the time when we think is the right time. That's what we'll always do. So I mentioned we're moving carefully. One of the things we're moving carefully about is that decision over, that assessment really over whether we've done enough, really. And you see that people are not writing down rate hikes. That's us thinking that we have done enough, but not feeling that really strongly, confidently, and not wanting to take the possibility of a rate hike off the table. Nonetheless, it's not the base case anymore, obviously, as it was, 60, 90 days ago. So that's how we're approaching things. And as I mentioned, we wrote down this SEP, and it talks about people have individual assessments of when it will be appropriate to start to dial back on the tight policy we have in place. And that's a discussion we'll be having going forward, but that's another assessment that we're going to make very carefully as time goes forward.
Should be long or short? That's really all we want to know. Just tell us. We can all make money, CherPow. Just tell us.
Nick Timmeros of the Wall Street Journal.
Dude,
CherPow, you've argued over the last year that policy tightening started before you actually lifted off because the market anticipated your moves and tightened on your behalf. The market is now easing policy on your behalf by anticipating a funds rate by next September that's a full point below the current level, with cuts beginning around March. Is this something that you are broadly comfortable with?
So this last year has been remarkable for the sort of seesaw thing back and forth we've had over the course of the year, of markets moving away and moving back and that kind of thing. So, and what I would just say is that we focus on what we have to do and how we need to use our tools to achieve our goals, and that's what we really focus on. And people are going to have different forecasts about the economy, and those are going to show up in market conditions, or they won't. But in any case, we have to do what we think is right. And in the long run, it's important that financial conditions become aligned or are aligned with what we're trying to accomplish. And in the long run, they will be, of course, because we will do what it takes to get to our goals. And ultimately, that will mean that financial conditions will come along. But in the meantime, there can be back and forth. And I'm just focused on what's the right thing for us to do. And my colleagues are focused on that, too.
The markets seem to think inflation is coming down credibly. Do you believe we're at the point where inflation is coming down credibly?
Listen, I welcome the progress. I think it's really good to see the progress that we're making. I think if you look at the 12-month measure, look at the 6-month measures, you see very low numbers. If you look at 12-month measures, you're still well above 2%. You're actually above 3% on core through November at PCE. That isn't to say I'm not calling into question the progress. It's great. We just need to see more. We need to see continued further progress toward getting back to 2%. That's what we need to see. So,
do we? Crazy thought. We could just make it 3% and we get there much faster.
And it's one of our two jobs, along with maximum employment, and they're equal. So we're very focused on doing that. As I mentioned, we're moving carefully at this point. We're pleased with the progress, but we see the need for further progress. And I think it's fair to say there is a lot of uncertainty about going forward. We've seen the economy move in surprising directions, so we're just going to need to see more further progress.
GINA, there it is. There she is. She raised her hand.
Gina Smilik, New York Times. Thanks for taking our questions. In the SEP from today, growth is notably below potential in 2024. If growth were to surprise us again in the way that it has for years now by being stronger than expected next year, would it still be possible to cut rates? Or put another way, is below trend growth necessary to cut rates, or would continued progress on inflation alone be sufficient?
So we'll look at the totality of the data. Growth is one thing. So is inflation, so is labor market data. So we'd look at the total, as we make decisions about policy changes going forward, we're going to look at all those things.
Look at all of
and particularly about as they affect the outlook. It's ultimately all about the outlook and the balance of risks as well. So that's what we'd be looking for. If we have stronger growth, that'll be good for people. That'll be good for the labor market. It might actually mean that it takes a little longer to get inflation down to 2%. We will get it down to 2%. But if we see stronger growth, we will set policy according to what we actually see, and so that's how I would answer.
I guess the question I'm asking, if you don't mind a quick follow-up, I guess the question I'm asking is above trend growth itself a problem?
It's only a problem it's not itself a problem. It's only a problem insofar as it makes it more difficult for us to achieve our goals. And if you have growth that's robust, what that will mean is probably will keep the labor market very strong. It probably will place some upward pressure on inflation. That could mean that it takes longer to get to 2% inflation. That could mean we need to keep rates higher for longer. It could even mean ultimately that we would need to hike again. It just is. It's the way our policy works.
Coins moving.
Hi, Chair Powell. Neil Irwin with Axios. How do you interpret the state of the labor market right now? And in particular, you've referred even today to evidence that it's coming into better balance. What would you need to see to conclude that it has reached that balance?
GINA, I need to see
So
GINA.
on the better balance side, there's just a lot of things.
Oh, the Fed having streaming troubles again. It looks like they're skipping unless we are disconnecting. God, I hope not. Pray. That's not what's happening. Just taking a peek while this is buffering. We'll let it refresh. Man, the Fed sucks at streaming.
Surveys of businesses, they're sort of the era of this frantic labor shortage are behind us, and they're seeing a shortage of labor as being significantly alleviated. If you look at shortages of workers, whereas they thought job availability was the highest it had ever been or close to it, that's now down to more normal levels by so many measures: participation, unemployment, so many measures, the unemployment, job openings, quits, all of those things. So wages are still running a bit above what would be consistent with 2% inflation over a long period of time. They've been gradually cooling off, but if wages are running around 4%, that's still a bit above, I would say. And I guess there are just a couple of other, the unemployment rate is very, very low. And these are, but I would just say overall, the development of the labor market has been very positive. It's been a good time for workers to find jobs and get solid wage increases.
Claire? Claire Jones, Financial Times. I'd say the mood among economists at the moment seems to be one of cautious optimism, which is somewhat corroborated by your forecast, by this sense that we are going to have a soft landing. Yeah, when we hear from the general public, there's a lot of discord about economic conditions. What do you think explains this disconnect, and does it matter for policymakers?
It may be. A common theme is that while inflation is coming down, and that's very good news, the price level is not coming down. Prices of some goods and services are coming down, but overall, in the aggregate, the price level is not good. So people are still living with high prices, and that is something that people don't like. And what will happen with that is wages are now real wages are now positive, so that wages are now moving up more than inflation as inflation comes down, and so that might help improve the mood of people. But we see those public opinion surveys. The thing that we can do is to do our jobs, which is to use our tools to foster price stability, which has such great benefits over such long periods of time, and which is the thing that really enables us to work for and achieve an extended period of high employment, which is so beneficial for families and companies around the country.
Victoria? Hi, Victoria Guido with Politico. I wanted to ask, on the flip side of if things start to deteriorate rapidly, if we do fall into a recession, if we do start to see unemployment rise at sort of the levels of inflation that we're seeing now, how would you all think about that in terms of rate cuts? Would that be a sign that you've done your job demand-wise?
Sorry, if
the economy looks like it's starting to fall into recession, if the jobless rate starts to rise.
That's not something we're hoping to see. Obviously, we're hoping to see something very different, which is continuation of what we have seen, which is the labor market coming into better balance without a significant increase in unemployment, inflation coming down without a significant increase in unemployment, and growth moderating without a significant increase in unemployment. That's what we're trying very much to achieve, and not something we're looking to see.
But would you take that as a signal that you should cut rates?
Obviously what we'll do is we'll look at the totality of the data, as I've mentioned a couple of times, and certainly the labor data would be important in that. And if you can describe a situation like that where if there were the beginning of a recession or something like that, then yes, that would certainly weigh heavily in that decision.
What's up, dudes?
Mike McKee from Bloomberg Television and Radio. Mr.
Keep them coming. Keep subscribing. Keep smashing the likes. Hype up the stream, guys. We have over 3,000 viewers. Hell yeah, let's go.
Chairman, you were, by your own admission, behind the curve in starting to raise rates to fight inflation. And you said earlier, again, the full effects of our tightening cycle have not yet been felt. How will you decide when to cut rates, and how will you ensure you're not behind the curve there?
He looks pissed.
So we're aware of the risk that we would hang on too long. We know that that's a risk, and we're very focused on not making that mistake. And we do regard the two. We've come back into a better balance between the risk of overdoing it and the risk of underdoing it. Not only that, we were able to focus hard on the price stability mandate. And we're getting back to the point which is what you do when you're very far from one of the two mandates. You're getting now back to the point where both mandates are important, and they're more in balance too. So I think we'll be we'll be very much keeping that in mind as we make policy going forward. And the things we'll be looking at, I've already described. You know, we're obviously looking hard at what's happening with demand. And what we see the same thing other people see, which is a strong economy, which really put up quite a performance in 2023. We see good evidence and good reason to believe that growth will come in lower next year. And you see what the forecasts are. I think the median participant wrote down 1.4% growth, but you know, we'll have to see. It's very hard to predict. We'll also be looking to see progress on inflation and you know, the labor market remaining strong, but ideally without seeing the kind of large increase in unemployment that happens sometimes.
He's sleepy. You hear it? He's sleepy.
When you begin the cutting cycle, will it be essentially run the same way you do it now with raising rates, where you basically do trial and error cut and see what happens, or will you tie it to some particular measure of progress?
We haven't typically tried to articulate, with one exception, really specific target levels, which was, some of you will remember the thresholds that we used in, I guess, 2013. The answer is, these are things that we haven't, you know, really worked out yet. We're sort of just at the beginning of that discussion.
Thank you, Mr. Chairman. Edward Lawrence of Fox Business. So if the Fed cuts rates, as the dot plot is showing, about 75 basis points, does that signal or that there's a belief of weakness next year in the economy?
In the economy.
It wouldn't, if that were, first of all, let me just say, that isn't a plan. That's just accumulating what people wrote down. So that's not something, you know this, but allow me to say it again. We don't debate or discuss what the right, you know, whose SEP is right. We just say what they are and we tabulate them and publish them. So it's, you know, it's important for people to know that. But it wouldn't need to be a sign of, it could just be a sign that the economy is normalizing and doesn't need the tight policy. It depends on, the economy can evolve in many different ways, right? So, but it could be more what I just described.
And you focused on core inflation. We've heard from in other meetings. How sticky is core inflation right now?
Oh, it's sticky. Sticky like the icky,
well,
man. Like,
that's what we're finding out, and we've seen real progress in core inflation. It has been sticky, and famously the service sector is thought to be stickier, but we've actually seen reasonable progress in non-housing services.
I got to pause it for a second. The S&P 500 could go to all-time highs like today. This is wild. What is going on here? What is going on? What is happening? The all-time high only 100 points now away? 4,820, currently at 4,710? What is happening here? This is bonkers. Gina?
Katerina Saraiva, Bloomberg News. Thanks for taking our questions. I just wanted to ask a little bit about, we had some pretty positive data this morning and yesterday. I'm assuming those were not incorporated into the forecasts we see today. But I just wanted to ask, how that kind of adds to your thinking, on the inflation outlook.
Right. So we got CPI the morning.
NASDAQ 100 E-mini futures are at an all-time high. Now the SPX all-time high call, not sounding so crazy. What is happening? What the actual F is going on? NASDAQ at all-time high right now for E-mini futures.
But nonetheless, participants are allowed to, encouraged to update their SEP forecasts until probably mid-morning today. After that, so staff has to accumulate all of that and create the documents that you see. So until about mid-morning, a little maybe late morning, it's okay to update. And I believe some people did update their forecasts based on what we saw today.
Okay, and do you see, how are you, when you think about, starting to think about the rate cuts next year or whenever they come, how do you think about the economy we're in now, kind of post-pandemic? Do you think that there's been significant structural shifts, and is that going to change how you look at a rate cut path?
The question of whether there have been fundamental structural shifts is a really hard to know the answer, and a very interesting one right now. The one that would affect, one that comes to mind, though, is just the question of where the neutral rate of interest is. And so, for example, if it's risen, and I'm not saying that it has, but if it were to have risen, that would mean that interest rates would need to be a little bit higher to convey the same level of restriction. The thing is, we're not really going to know that. People will be writing papers about that 10 years from now and still fighting about it. So it's just that it's going to be uncertain. So we're going to be making policy in this difficult, uncertain, really unprecedented environment. Someone once said that you know the natural rate of interest by its works, and that's really right. But that's very difficult because policy operates with a lag. So it's one of the reasons why we slowed down this year. We started slowing down at this meeting last year, reducing the pace at which we were adding restriction. And over the course of this year, we really slowed down a lot to give those lags time to work. In terms of demand, has demand shifted more away from services into goods? You can make a case for that the shift back into services has not been complete, and it doesn't look like it's ongoing, but I don't know if that's right. Maybe people just bought so much stuff that they temporarily don't want any more stuff. They haven't got any place to put it.
Got too much stuff. That's the problem in the U.S. with too much stuff.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. You said back in July that you needed to start cutting rates before getting to 2% inflation. As you mentioned, PCE inflation is now running at 3.5% on core. On a 6-month annual basis, core PCE is running at 2.5%. Though when you look at super core and shelter, they are, of course, stickier. So in looking at the different components of the data, how much closer do you have to get to 2% before you consider cutting rates?
I mean, the reason you wouldn't wait to get to 2% to cut rates is that policy would be too late. I mean, you'd want to be reducing restriction on the economy well before 2%, because before you get to 2%, so you don't overshoot. If we think of restrictive policy as weighing on economic activity, it takes a while for policy to get into the economy, affect economic activity, and affect inflation. So I can't give you a precise answer, but if you look at what's in the SEP, and I think you'll see a reasonable estimate of the time lags and things like that it would take.
Do you think below 3% would be reasonable?
I wouldn't want to identify any one precise point, because I would be able to look back then and probably find out that it turned out not to be right. But we'll be looking at it and looking at the broad collection of factors.
We don't want to give you anything actionable, so maybe.
Hi, Chair Powell. Jean Young with Market News. Wanted to go back to the stickiness of inflation question. Over the past couple of years, a lot of central bankers have talked about the more difficult last mile of getting inflation back down to 2%. Yet it's also been surprising how fast inflation has come down this year. I'm curious, do you think something has changed in our understanding of inflation, or do you subscribe to this notion still, or is it something different about the U.S. economy? Thank you.
I think this, we felt since the beginning that it would be a combination of two factors. The first factor is just the unwinding of what happened in the pandemic, the distortions to supply and demand. And the second thing would be our policy, which was weighing on aggregate demand and actually making it easier for the supply side to recover because of lower demand. We thought those two things were going to be necessary. Sorry, say the last part of your question again.
He's like me, forgot what he was saying.
If there was something different about the U.S. economy.
Yeah, so it's not that, it may or may not be about the U.S. economy being different. I think that this inflation was not the classic demand overload, pot boiling over kind of inflation that we think about. It was a combination of very strong demand, without question, and unusual supply side restrictions, both on the goods side but also on the labor side, because we had a participation shock. So this is just very unusual. And, we had the view, my colleagues and I broadly had the view that we could get a lot of, you had essentially a vertical supply curve, because you ran into the limits of capacity at very low levels because there weren't workers and because people couldn't, the supply chains were all broken. So we had the view that you could come straight down that vertical supply curve to the extent demand reduced, and something like that has happened. It happened so far. The question is, once that part of it runs out, and we think it has a ways to run. We definitely think that the sort of supply chain and shortages side has some ways to run. Does labor force participation have much more to run? It might. Immigration could help, but it may be that at some point you will run out of supply side help, and then it gets down to demand, and it gets harder. That's very possible. But to say with certainty that the last mile is going to be different, I'd be reluctant to suggest that we have any certainty around that. We just don't know. I mean, inflation keeps coming down, the labor market keeps getting back into balance, and it's so far so good. Although we kind of assume that it will get harder from here, but so far it hasn't.
Okay, we'll go to Megan for the last question.
Hi, Chair Powell. Thanks for taking our questions. Megan Casella with Barron's. I want to ask about the balance sheet, given the Fed's focus now on proceeding carefully and considering rate cuts. And can you talk us through what the latest thinking is, and has there been any consideration of altering the pace of quantitative tightening at all?
We're not talking about altering the pace of QT right now, just to get that out of the way. So balance sheet seems to be working pretty much as expected. What we've been seeing is, that we're allowing runoff each month. That's adding up. I think we're close to 1.2 trillion now. That's showing up. The reverse repo facility has been coming down quickly, and reserves have been either moving up or, as a result, or holding steady. At a certain point, there won't be any more to come out of, or there'll be a level where the reverse repo facility levels out, and at that point, reserves will start to come down. We still have, that we intend to reduce our securities holders until we judge that the quantity of reserve balances has reached a level somewhat above that consistent with ample reserves. And we also intend to slow and then stop the decline in size of the balance sheet when reserve balances are somewhat above the level judged to be consistent with ample reserves. We're not at those levels. With reserves close to $3.5 trillion. We don't think we're at those reserves. There isn't a lot of evidence of that. We're watching it carefully, and so far it's working pretty much as expected, we think.
Adjusting that thinking at all by the time you're considering or moving forward with rate cuts? Is that time to rethink, or are you still going to follow that thinking?
He needs a nap.
So I think they're on independent tracks. You're asking, though, the question, I guess you're implying the question of can you continue with QT at such time, QT, which is a tightening action, at such time as policy is still tight? And the answer is it depends on the reason. If you're cutting rates because you're going back to normal, that's one thing. If you're cutting them because the economy is really weak, so you can imagine you have to know what the reason is to know whether it would be appropriate to do those two things at the same time.
Thank you.
Thanks very much.
We did it! The spiciest FOMC ever. Take that, Benjamin Cohen. I love you, Benjamin, but I just wanted to yell, take that, Benjamin Cohen. Told you it would be. Bitcoin breaking a new highs. New all-time high on the NASDAQ. Wild shit. Did not see this coming. SP 500 looking like it wants to follow. Holy shit. Just like, holy shit. I'm sitting here trying to, stay calm while the stuff is just blasting off, man. If the NASDAQ hadn't just hit an all-time high, I wouldn't be as confident. But S&P following its footsteps, not about 100 points off after rallying, 200-300 points today. Insanity. But there it is, NASDAQ blasting past that 16.7 for mini futures. NASDAQ as well. Blasting past the all-time high, putting on gains in price exploration. What's going to happen? Coin making some moves, gaining about up to 150 during the live stream. What's ADA doing? Someone saying ADA. We already looked at ADA at the beginning. Same thing, 72 cents, looking for $1. Bitcoin continues. This was by far the spiciest FOMC ever. And certainly it was the spiciest this year. So we were right. We had hundreds of new subscribers. If you're out there and you haven't subscribed yet, join us. Join us. Hit that button. Join the Discord. But we had hundreds of new subscribers. I want to say 250, maybe 300. Real quick at the end, I see Signal 1 getting it in. Attila Kiss, Janos, Wit GM, Duzin, Gaspersic, Mick Pips, Wolf, Neutral Face, Derek B. Shout out to Piano Matty B. I missed your super chat, man. You can smell the Scotch burps from Canada. I love it. Dragos Drago, Chetan Deshmukh, Arjun, Vishal Grapes. So many people. Freaking amazing. Blown away by this. I love you guys. We are live here almost every single day. Make sure you tune in. Make sure you have notifications enabled. You're subscribed. We'll be live again at the latest tomorrow. But with what's going on with the charts right now, we might be live again tonight. Keep your eyes peeled. Keep your alerts. Keep your notifications enabled. Keep your phone on loud. The spice is just beginning, fam. I want to shout out Tom Powell for being a guest star today. He killed it. Amazing. Hopefully he'll grace us in 2024. Cheers to you guys, fam. Hell of an episode.